Hi, everyone. Mike White here. Welcome to this week's blog post. Certainly another crazy week of volatility, lots of information coming out, the needle moving in the bond market all over the place. It really is a challenge for sure, but it follows the suit that we've been following for pretty much the whole year with this volatility in trading ranges where we've seen 30, 40, 50, 60, 70, 80 basis point swings in the course of a day, more than 100 basis point swings, in the course of a week. And the market's just trying to find itself, and it still struggles to, wrap its mind around where things are. And I think the biggest problem with that, with the volatile rate market, is that we all forget that the interest rate is just one component of what we're looking at. And it's not, it's not the rate itself that is the determining factor of what goes on. And we all know that, but we don't do a great job of explaining that. It's about the payment. It's not necessarily about the rate. And we know we can sit there with all the charts and graphs and whatever and prognosticate and see what people are saying on social media. But the truth of the matter is nobody has a crystal ball, and knowing exactly where the rate market's going to go and when is certainly never going to happen. But the point is we've got to look at the reality that nobody gets qualified at the rate, they get qualified for a payment. And we lose sight of that. We deal with it every day, but we don't explain it every day. And we certainly don't explain it well, or at least most of us don't, to both the client and the referral partners around us. And I wanted to spend a little time today going over that. And again, as I've said for pretty much a year now, when it comes to the rate environment, when it comes to the market in general, if you like it, lock it, put the deal to bed if it's something that works for you. And down the road, if rates go lower, you can always refinance. But you can't overcome the market moving against you, because there's never a guarantee that it'll come back to where it was. There are a lot of people who were sitting this time last year holding out for housing bubbles and prices to come down and interest rates to go back into the low twos. And, they didn't pull the trigger on any of it. And where are they now? So one of the things that we can do is really understand that while we can't control interest rates, it's only one component, and many of the other components are well within our control, or there are things that we can do about it. And so we have to address these things, and we have to share this information so that people know, because again, there's a lot of different things people can do to improve the amount of money. And again, that's why people are interested in the rates. They're interested in rates because it's what's the cost of borrowing that money. But borrowing the money is just, again, one piece of this. And the cost of borrowing that money, the rate is only one piece of that. And so we have to go through the conversation that says, hey, we can address some of these things. First of all, is our credit in the best possible place it could be? We all know the cost of borrowing money is directly connected to the market conditions, but also that person's credit score. People who have 620 to 720 credit scores are going to pay more money than people with 720 to 820 credit scores. It's just a fact. So what are they doing to improve their credit scores? The other piece to this puzzle is if interest rates are really challenging the people as far as their monthly payment goes, we can lower the cost of borrowing money. If we reduce our total debt to income ratio, that housing payment now fits in to the profile better. What can we do about our debt to income ratio with other things? What can we do about our loan to value, which could impact the cost of borrowing money? Money is cheaper for somebody with a 40% down payment than it is with somebody with a 5% down payment. Now, some of these things are not possible, but there are items that can move the needle in one way or another. So we talk about these things as far as the interest rate factor itself, but there are also other things involved in that payment. And we know taxes. generally the second largest component of anybody's mortgage payment, the taxes, can be vastly different on properties with the same price tag. And so somebody's got looking at one house and the taxes are $300 a month, and the exact same priced house across the street, down the block, next neighborhood is 250. Well, that's $50 a month. I mean, again, $50 a month could be, a quarter of a percent or a half a percent in interest rate, depending upon how much money you borrow, right? Again, it's all relevant and relative. It all makes up that payment. Homeowners insurance. I can't begin to tell you the number of people who don't bother looking at homeowners insurance and understanding that, there is a big difference between homeowners insurance companies and the types of coverage you can get. Remember, your homeowners insurance, by your lender, you're required to have certain coverages. But there are many other coverages and many other types of coverages and many other possible deductibles, etc., that significantly can change the price of that homeowner's insurance. And again, people are balking because interest rates went higher, but they don't look and say, hey, my homeowner's insurance rate, if I look at this or I do that, or I take this deductible versus that deductible, you can often save in monthly payment other things. We talk about product and program, and one of the things that comes up is either MI or PMI. Those things can be wildly different based upon the loan to value, the program you take. Sometimes you can look at these different programs and say, is it worth putting 3% down versus 5% down? Is it worth putting 10% down versus 5% down? Can I put 12% down and change? Those things can change the cost dramatically in certain, or even the program itself can change the cost of mortgage insurance or private mortgage insurance, depending upon what the circumstances are. But those are, again, another component. Flood insurance. Again, people don't even know, does the house have, flood insurance? Is it in a flood zone? I see, again, now I deal with a lot of people, but I have loan officers come back and tell me houses are listed, and when that house was bought, they didn't have flood insurance on the house because it wasn't in a FEMA flood zone. FEMA changed the map, and I've had it happen with clients where they've gone into whole neighborhoods unaware that once, those FEMA changed the map, those houses were now classified in a flood zone. And when they were selling those houses, people wanted to know what the flood insurance policies were, and those people didn't have flood insurance. So it becomes really critical to be aware of these things, know these things, and make a determination. In some markets, there are more than one option for appropriate flood insurance. You've got to pay attention to it if it impacts your market. And another thing that comes into here, and certainly not least, is your homeowners association, if it applies. Again, in South Florida, where I live, homeowners associations are pretty standard. It's more properties than not in my area are in HOAs. And I will tell you, with different price houses, HOAs can fluctuate here in my area on the same price house from, $125 a month to $750 a month. It depends on what services that HOA is providing. It depends upon the type of community, the benefits, the amenities that are there, and what goes on. And so, we don't think about, you buy a house here and you got $125 HOA and it goes into your payment, but you're required to cut your own lawn, and you go to the one that's got $500 a month HOA, but they do yard maintenance and exterior power washing and maintenance, etc., on the property once a year for you. It totals out the same thing, except the higher HOA payment is now calculated in your monthly payment, whereas if the lower HOA that doesn't include any of those things, guess what? They don't calculate how much it's going to cost me to mow my lawn, or pay somebody to mow my lawn, or power wash the house. So those things that become very critical to people's understanding of what makes up a payment, what it means, what they can do, the options that they may have. And again, when people call you wanting to have the rate discussion, you've got to complete the conversation and have the payment discussion. Because again, it's not just about the rate. The rate is just one factor in the biggest piece of the puzzle, which is it's all about the payments. You have questions or comments or would like to discuss more about this, give me a call or send me an email at mike@imtcoaching.com. Have yourselves a great week.